All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. And guys, I talked about this yesterday in the video, but the push up was looking weak here, and we were expecting a possible drop to the downside. Let me go ahead and clean this up here. And we were looking at this 85K area, 84K, excuse me, as a resistance area where we could roll over and start to dump again. We were talking about this whole move up here, this kind of ascending channel that we're seeing being kind of a weak, low volume move to the upside. So we were expecting at least a retracement down to make a higher low, if not to retrace fully and make a lower low. So let's go ahead and go into this. I'm going to delete this real quick and we'll clean up this chart and we'll start from the beginning here. We were at, I'm going to pull the channel that we were looking at yesterday in the video. And sorry that I posted my video so late for you guys that are used to my normal schedule. I just had some things that I had to take care of and got it out a bit late, but I did get it out for you guys. So I hope that was helpful. We were in this ascending channel here, and you can see that it was being respected pretty well. Last night when I was making the video, we were around this midline here, and we were seeing a little bit of a rejection from this midline in here. Well, overnight, we did see that little three-wave move down here to hit the bottom of the channel. We found a little bit of support on the bottom of the channel, moved up to our VWAP, but rejected from our VWAP, came down to the bottom of the channel again, saw a pump up on PPI today. We had our PPI print, which did come in better as expected. That gave us that little push here to the upside. But just like yesterday, the CPI print gave us a push to the upside to grab liquidity and then dumped us. PPI kind of did the same thing, just on a more local level. We saw the PPI print at the bottom of the channel. We saw a push up to grab the local liquidity of the local internal highs here. Grab that liquidity, and then we finally dropped and we started breaking the channel down. Now you can see here, I did post about this live in the Discord, in Jason Casper's Discord, which, by the way, I have a super exciting announcement about that now that it's out. I am joining the Casper Crew Discord as an official instructor. So if you guys want to find me and find where I'm posting in the Discord all day and giving live updates as the price action is happening, if you guys want to join the Casper Crew Discord, I'll have links in the description below. And that's where you can find me. You can hit me up in the Discord throughout the day, ask questions about the price action, see my posts, see my trade setups. It'll all be in there. So link to that Casper Crew Discord in the description below. That'll be there for you. All right, so yeah, we did break the channel. You can see we came up for a bearish backtest on the channel. As we were hitting that bearish backtest, we started seeing this rejection, and I did post in the Discord, we're seeing the bearish backtest and the rejection. I expect lower, and we did continue lower here. We continued down to a local 786 area. So let's zoom out on this onto the hourly chart, and we're just going to go from the second pivot here, the second low. You're going to take your fib and go from the low to the high, and you can see, let's just turn on the 786 here. And we pretty much hit down into our 786 area. We did go a little bit lower than that, but we are seeing a small bounce from that 786 area there. Now, this bounce to me is not very convincing at all, and I was just tracking some of the lower price action. So we'll look at this. Let me get rid of the channel now. I'm no longer looking at this channel. We broke it to the downside. Let's get rid of this little local SFP here. And what we're looking at now primarily is going to be this structure here. Let me grab my pen. We're going to be looking at this whole structure here to see what's going on within here. And you can see from yesterday, I had this purple box of support. If we are going to make a higher low, this is the area that I'm primarily interested in looking for a long from. Or if you shorted 84K, to look to take profit on your short at 84K, at least, you know, TP1, you can leave the rest to run just in case we are going to come lower. But right now, we are seeing a small bounce. I'm not convinced by this bounce here. Let's go zoom in onto the 6-minute chart, 5-minute chart, whatever you guys like there. And we'll look at this small price action that we're seeing here, because that bounce from the 786, first of all, there's a couple things. In this area here, we were kind of forming this triangle that we were in, almost like a bear pennant. But I was looking at it more like a channel here. And so if we just create a parallel channel from the two lows up to the initial highs here. And you can see that we did reject from the top of the channel. Yes, we did go above it just a little bit, but when you zoom out, you can see it was just a little wick past it. And now we are dumping here. So it's just a micro trend channel that I was following. If this is going to just kind of chop and start to form a more sideways range, a real small sideways range in this area, then we could probably look for the midline or the bottom of the channel to hold, maybe do something like this, or, you know, all that small intraday price action. But we are rejecting from the top of the channel, and I do think we could even make another move up to the VWAP. Now, we're only 20 minutes away from a close, from the daily close, and this VWAP will snap to price action at daily close if we're below it, if we're dropping. Now, if we're pumping up to it, it will still snap to close, but it's going to be right around that area. And I do think we might go a little bit higher if we bounce from the midline. We might go a little bit higher, and the reason why I think that is, if let's go ahead and zoom out on the hourly. And you can see here, I talked about this also in the last couple videos. For 5 or 6 days, let's actually zoom out to the daily so you can get a better look at this on the daily. For 5 or 6 days, our anchored VWAP in this area here was holding as support. Yes, we were seeing wicks below it, but overall, the candle bodies were closing above the anchored VWAP. This is a key anchored VWAP from the 49K lows. Got a good, decent bounce from that to back test the value area low 2 times. We rejected 2 times from the back test of the value area low. That tells me that Bitcoin is still in more bearish price action, and we can probably expect continuation to the downside based off the rejection. We did not want to confirm fair value back within our prior range, and we are working on establishing a new range. All right, so we rejected twice from that value area low, and then we finally broke our anchored VWAP to the downside and closed daily candles below it. We started closing daily candles below that anchored VWAP, which was a really key thing to watch for this. And since we've been below our anchored VWAP, if we go onto our hourly chart here, let me get rid of this channel now so we can clean up the chart. You can see here very clearly we are starting to form a sideways range since losing the anchored VWAP. Really, from this low here and in this general area, we are forming a sideways range now under the anchored VWAP. So we look at this range, we play this range until something happens, either until it breaks to the downside or until we break it to the upside. So we can grab our volume profile and we can look at the relevant volume. Remember, with the volume profile, you're trying to measure the relevant volume of the range that you're in there. It'll give you your key high volume nodes of the range that you're in. So we've established we're clearly starting to form a range under the anchored VWAP. We grab our volume profile, we measure that range here, and you can see value area high for the most part has been rejecting us every time we come up to the value area high. For a while, the point of control was acting as resistance. When we broke it to the upside, it acted as support 2 times in this area. Even a small little bounce from it earlier today, but it was just a small bounce before losing it. And we have come down to the value area low. That is why we're seeing a small bounce from where we're at right now. It is our value area low that we're, and our 786 was very close by that. That's why we're getting this small bounce here. But also look where the point of control is. Now that we've lost the point of control, if we come back up to the point of control and backtest the point of control, bearishly backtest it because we lost it, and we reject, we have a pretty high probability of coming down lower and coming down to actually hit our support level down here. So I do think there's a possibility we could come a little bit higher to actually touch the point of control and the VWAP around 81.6, 81.650, at least on Coinbase. And we might continue to chop in that channel for a bit until we come up to here and then make the decision here. Now, if we can break this to the upside and flip it to support, we could probably make our way up towards the highs of the range again. Maybe test this anchored VWAP and value area high again. Or what you could do is you can just do your local golden pocket pull from the range high to your current lows here, and look at 786 is right in that zone, right next to our value area high. So I'd be looking for this area, this general area here, as very, very local resistance if we make it up there. But first we have to flip the point of control to support. I think that we might reject from this point of control just based off what we're seeing on the charts locally. I think that we might reject this and continue to come down to our bigger support level that we laid out yesterday. And this should be green. Okay, so why am I looking at this level as support? Well, first off, let me get rid of this and clean this up just a bit now. You guys saw that range. If we do our Fibonacci pull from the lows of the range, from our lows to our highs that we created a couple days ago, yesterday on the swing failure pattern, you can see that our 786 is right in the middle of this box. It's pretty much right on, it's the lower part of the box here. We have a daily level within the middle of the box, and then the top of the box, we have the SFP here. Now, I didn't bring the box all the way up to the SFP because you do want to see a little bit of a wick past that level. So just shorten your support zone to get a better entry there. This box is sitting here. Now, I do want to mention, though, we do have a golden pocket that's just above that we might see the bounce from the golden pocket instead of the 786. So if we take that same fib pull and we turn on our golden pocket, you can see the golden pocket is we just front ran that golden pocket earlier today on the bounce. And I do think that this 79, like 560, 570 area down to 79.3 might bounce us. And the reason why I think that is because we could see, well, I actually don't like it as much. We could see the liquidity grab of the very local lows that we just had a couple hours ago. We could see the SFP of these lows into this golden pocket, but I don't think this golden pocket is actually as strong as our 786 down below into the daily and into the liquidity grab of this key liquidity on the first little dump, this B wave of this ABC here. So I do think that that is the area, the more pronounced area of support we should be looking at. And that would work very nicely for a bounce. If we're going to make a higher low, this is the area that it's got to happen in. If we break the 786, then we're most likely going to come down and take our lows. We'll zoom out to the daily chart here real quick, and you can see that we do have that fresh daily level. Let me pull this over, and then we'll just hide this for a second. You can see that fresh daily level there is at 78,544 on Coinbase. So we have the daily level with it right next to that 786, and it's at that liquidity grab, that internal liquidity grab. Let me put that back on, and we'll zoom back into the 15-minute chart. So yeah, I am looking for us to continue to drop at least to this support here. We might bounce up and come up to our value area high 786, but right now we just play the local range that's in front of us. Trading is about level to level and looking at your setups level to level, being aware that if they're only local setups and Bitcoin starts getting very volatile, we could bust through those levels really quickly. There is a possibility that Bitcoin does not find support here and we dump straight to make new lows. So when we're coming into this area here, this green box here, we want to be seeing local bullish divs on our oscillator here. Probably want to see money flow coming up on lower time frames. So right now, if we go into the 6-minute, we are not seeing bull divs at all right now. We were seeing bull divs. Let me grab my pin here. You can see right all through here, lower lows on the price action, and we were seeing higher lows on the momentum with money flow bottoming out and now starting to come back up here. And right now, I got to say on the 6-minute, money flow doesn't look the worst, and it looks like it could continue up a little bit. That's why I expect us at least to move up to the VWAP and the point of control that's just above us, around 81,650, 81.7. And we'll see what happens when we get up there. If we roll over, we're going to come down here. Maybe that'll give us some time on lower time frames. Now, it's not going to give us enough time on higher time frames to create bull divs. So what we got to look for is zoom into the lower time frames, and we want to look for the same sort of bull divs that we were seeing in here at the lows at that support box. Or we could also zoom out on the CVD and look at bullish CVD divs on higher time frames from the 76.6 low. I'll go over that in just a second here. So yeah, we can look. I'd say you're probably not going to get bull divs over the 12 to 15 minute, but if the 12 to 15 minute is showing some bull divs, like if we do something like what I have highlighted here, and this comes down like this and comes like this here, you would be seeing lower lows into the box of support, and then you'd be seeing higher lows on your momentum waves. That would give you your bullish div. And for me, that would be good enough to at least attempt along on this position here. And just like yesterday, there's two ways to take this long here. The two ways you could look at taking this long here. Let's zoom out onto the 30-minute chart. And if you're going to look at taking this long, let's see, long position, let's just say from the daily, you could put your stops. Now, the technical proper stop would be to go below this low here. And then you would bring it up at least to the value area high of the range, to the anchored VWAP. But you see, that's only a 2-to-1 risk-reward ratio. That's not really good enough for me. So you could also look to take it up to the 88.6K area, where we do have a major resistance that I highlighted in yesterday's video. Now, that's a proper risk-reward ratio trade that I would be interested in. But I think that if we break this 786 down here, we have a very high probability of coming to take these lows. Surely, if we break the 886, we're definitely probably going to come take the lows, even if we see a bounce from the 886. So you can pull your Fibonacci from high to low. Let's turn on our 886. Now you can bring that 886 over here. And what I personally would be looking for is taking the long from this box, and I would probably set my stop right below the 886. That way, if we don't bounce from the 886, we probably know we're going to most likely come take these lows. Why leave that extra stop there to waste a little bit more money or to have a lower position size? So now you have a 7.75 risk reward ratio if you're bringing it up to 886, or even if you're bringing it up to the value area high slash anchored VWAP, it's a 3.83 instead of a 2.15. Much better risk reward ratio. You're still longing from the same level. You're just tightening up your stop loss so that if you get stopped out, you don't lose as much. And also, if you win that trade, you're going to have a better risk reward ratio. You'll be able to put a bigger position size on that trade and still not lose. You'll still lose the same amount of money if you lose the trade. So that's what I'm looking at locally here on Bitcoin. That's the only long that I'm interested. Well, that's not the only long that I'm interested in. That's the only support that I'm interested in looking at if we're going to make a higher low. If this is going to be, like I discussed yesterday, all this is a wave 1. We're coming down for a wave 2, and then we're going to see a big wave 3 up to 88.6 or even higher. This is the area where I would look for. And often we know our common targets in a wave 2 correction. The two most common targets are the golden pocket and the 786. Now, the 0.5 is another target for a 2 wave. But I would be looking at least, we've already broken the 0.5. So we'd be looking towards that golden pocket or the 786. Now, because we have extra confluence at the 786 with the liquidity grab into the daily, that's where I'm really looking at. There is a possibility that this is not going to make a higher low and continue up. There is a possibility that this was a corrective weak move like we've been explaining and talking about, and we completely roll over and continue down much lower. So if that is the case, we could be looking at the SFP of the lows from whatever that was, Monday, because you can see that we did front run our pitchfork band here, our pitchfork band of support. We did front run that. So if we do come down, grab the liquidity into our pitchfork band and then maybe see a move up here, the SFP would be a trade that I'm interested in taking. Now, with this SFP, if we make our way down to this area here, you'd still want to be seeing local bull divs on the charts in order to take that trade, and you'd want to see the confirmed liquidity grab. And what do I mean by that? You'd actually want to see us dump past this level at 76,555, at least on Coinbase charts. You'd want to see the actual dump past this level to hit the pitchfork band, and then you would want to see the candle close at or above this level here. Now, once that happens, you can enter your trade. You enter your long. Say we get it around 76,800 or so. Oop. Let's grab our long position. Say you get it around 76,800 here. You would put your stop below that wicked low, whatever low that was. So say this came down like this, hit into here, maybe just a little bit past that, and then we reclaimed it. you'd be longing this area here, and you would be putting your stop below the wick. And then, of course, your first level of take profit, what you could do is you could pull a golden pocket from your highs down to your lows. And this is just a made up golden pocket right now. This is a speculative golden pocket based off price action that has not happened. So just be aware of that. You could look for your golden pocket, which looks like it's coming in right around the point of control of that range. If we take that range again and look at our point of control, yeah, it would be right around that golden pocket. So that would be a TP1 for me, because, or you could even look to TP1 at the value area low. Because if we do come back up here and reject from the value area low, we will continue to roll down, just like we did on higher time frames last week. Rick came up to the value area low, rejected, came up to the value area low, rejected, made new lows. So you can just look for the same sort of price action on a smaller time frame. But that's what I'd be looking at. Now, none of that has actually happened yet. We just have to be patient and wait for the charts to get to our levels. Right now, we are kind of seeing a small weak bounce here. Maybe we're going to come up to that point of control around 81.6. You know, money flow doesn't look the worst on lower time frames. So I do think there is a possibility we could come up there. 12-minute looks like it's starting to roll over here. So that could be a sign that we are going to reject from that area. Let's go to our 5-minute. 5-minute it's not looking the worst, but you can see we are starting to top out here. And that little bull divs that we were seeing here on the 5-minute gave us this small push up, gave us this money flow transition into the green, but now it looks like it's starting to roll over and come to the downside. We also did have that ascending channel on a micro time frame trend that we were following this ascending channel here. And based off this ascending channel, we knew to look, anytime you see an ascending channel, to look for shorts near the top of the channel, especially when you see a fake out of the channel like this, and then the very next candle you dump back into the channel. You can look for a short from this area. Stop would go right above that high, like right above it. And then you would put your, you could look for the bottom of the channel, which is probably going to be in confluence with our local golden pocket. Yeah, bottom of the channel in confluence with the local golden pocket. That would be a TP1 for this very small scalp short. Now, I don't recommend, if you're a newer trader trying to scalp these kind of levels, get some experience in the markets and get some experience based off price action. I'm very familiar with channels, so I understand when we see a fake out like this and then dump back in, oftentimes we do come to the bottom of the channel, and then you can look for confluence to see if there's confluence there. So I wouldn't recommend, if you're newer to trading, to look for scalps just yet. Scalp trading can be very stressful, and if you're not very precise with it, your risk management can get out of control. So for the newer traders out there, I would look for only bigger, like day trade moves, and bigger, the bigger moves in the market that are at much bigger support levels that have more confluence in the area. But yeah, so that's kind of what we're looking at here on Bitcoin. We're seeing a little bit of the drop here. I do think we could come down to this area, at the very least come down to this area, if not much lower. And Bitcoin overall is still looking kind of weak, guys. I mean, there's not much else to say. Yesterday we talked about this push to the upside just being low volume, ascending channel, crappy type of price action that looks far more corrective than impulsive. Now, I know we do have bull divs on the daily, and trust me, I do pay attention to bull divs on the daily because they do mean something. And when you see a bull div on the daily, usually it gives you at least a good relief rally to the upside that could last a couple weeks. But we are in a strong downtrend. We have seen us rejecting from local resistances on the strong downtrend over and over. So when you see multiple tries coming up to our local resistance, rejection, 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 you can expect to finally break down after trying multiple times and not being able to. All right, let's go ahead and look at our CVD so we can talk about that CVD setup. Let's refresh the chart here. All right, let's zoom out onto the 15-minute chart. And someone asked me how to set this up in my comments section, so I can go over that real quick too. Because just go to coinalyze.net, and then you're going to go to charts. Let's see, it's in here somewhere. You just go to your charts on Coinalyze, and then once you're in your charts, you just go into your indicators, which is the FX symbol here. And I use just the normal CVD. So just type in CVD, cumulative volume delta. You use this one here. This one will give you whichever exchange you're on, it will give you the CVD for that exchange. So right now I'm on Bybit. This is the CVD for Bybit's order flow. And then with open interest, I do tend to use an aggregated open interest. Now, a lot of people that are great traders, like Jason himself, does not use aggregated version of open interest. They just use the normal open interest. The reason why I like to use aggregated, because it aggregates all the major exchanges together. And to me, it cleans up some of the noise of just one exchange. Like say you have a bunch of traders on Bybit that are bullish and open, they're longing a certain area and open interest is going up on your Bybit chart because of that. But the rest of the exchanges might not be so bullish and the open interest is flat or going down even. And that's why I use aggregated, because aggregated tends to give you a cleaner look of the overall markets, all the exchanges. Now, I understand you say, well, then why don't you use aggregated CVD? I just back tested aggregated CVD. I actually used to have both aggregated CVD and regular CVD on my charts. And for me, the regular CVD, because what CVD is, cumulative volume delta is, it's pretty much your aggressive market participants. So it's participants in the market that are market shorting or market longing, your aggressive participants. And it's one of the only real-time indicators there is on the markets, and same with open interest. And usually if you're on a major exchange like Bybit, that is one of the largest, most traded exchanges, if a lot of people are doing it on the marketing and your aggressive participants are doing the same thing, then even on the aggregated, it'll be very similar, but you can get a little bit of noise that gets mixed in with it. So because it's market orders, I do like to use just the exchange. But yeah, so to get the aggregated open interest, you just come up to your FX button again, and then you can look for it, aggregated CVD, coin margin, stable coin margin contracts. Now, the reason I use stable coin margin contracts is because we're trading against USDT. And most of the exchanges, when you're doing derivatives trading, you're trading against USDT, not USD or USDC. So I use stablecoin margin contracts. Just for me, your preference, if you want to use just regular aggregated CVD spot or aggregated open interest spot, what we want to look for is open interest. So you can just type in open interest in here. Open interest, you got the aggregated open interest, all of these different ranges, different options here. So that is, I use the aggregated stablecoin open interest. But yeah, okay, so that's how you set it up. Now that we're in here, we can look at our CVD to see if we're seeing any possibility of bullish absorption. Because if we're going to come down to our local golden pocket and daily level that is around 78.5 down in this area here, you're going to want to be seeing bullish CVD absorption as a possibility to take along from that box. So let's actually, while we're here, we can grab let me grab my magnet on here. We'll do this here. Let me just go in here and turn off some things real quick. Let's get rid of all of this, turn this off so we can just see the 786. And there we go. Oh, let me get rid of that stupid trend line. All right, now we have our 786 in this area here. This is where we're expecting the bounce around the 786, around the daily. The daily's around 78.555, so just above the 786. So if we're coming into this area here, coming down, we're kind of just grinding our way down into this area. We want to be looking for higher lows on, that was horrible. Let me turn the magnet off now. We want to be looking higher lows on the price action. So if we are coming into this and we're expecting a bounce, it's gonna be a higher low. Our CVD from this area. Now it's very important. If you're not sure how to get that exact area, come into your tools and grab a vertical line. Take your vertical line and throw it right on that low. Now you can look at your CVD from this area here. So you can see actually, and let me make this line thinner so you can actually see where it's at. And Yeah, we're on the low. Okay, so we're on the low. You can see CVD on that low was pretty low down here. Now, what you can do is you can take a horizontal ray and you can put it right on where that vertical area was, put it right on the CVD there. Open interest. So our open interest right now is pretty much flat. You can see we're just above it a little bit, above the blue line a little bit. If we want to see bullish CVD absorption, we want to be seeing the higher low in price action. We want our CVD to be making a lower low, meaning participants in the market are trying to short the market, but it's not pushing price down. What that means is there's bigger players that are absorbing those short positions, building up a long position. Right now, we are not seeing that. We are not seeing that. Actually, this CVD looks very chaotic and bad right now. It looks like just people getting, playing this little range and getting stopped and getting, maybe some taking profits and everything, but we're not seeing real clear bias forming here as far as whales trying to absorb. Now, we're not quite down to this level yet. So if that takes us another half a day or so, we might see some come in. And then as far as open interest goes, you do want to see your open interest from this vertical line here overall increasing. Now, right now, it doesn't look very good. We were decreasing for a while, and then now we're starting to increase here. But really, you want to see a steady increase of open interest as this range is building, meaning that there is new positions that are entering the market. In order to have real absorption in a market, you have to have new positions to absorb. So if your open interest is flat or if your open interest is decreasing, you do not have new money to absorb. The new shorts, you want to see new shorts coming into the market and being absorbed by whales to build a long position. But if it's just positions getting stopped out, so if our open interest is decreasing, that means that it's just positions closing out. Now, you can't, if positions are decreasing and getting smaller, whales are not really absorbing anything. They're not absorbing new positions to build that fuel to the upside, to make the explosion to the upside. So that's a little bit about CVD and open interest. Right now, we are not seeing any open interest here on the markets at all. We're not seeing any bullish divs on the market. And we could still look for the long at the 786. We would have to see the signal from Market Cipher of local bull divs. Just pretend this is Market Cipher, local bull divs. Or actually, I could probably just go back to Market Cipher. And let's go on to our 6-minute chart or maybe our 12-minute chart. And yeah, as we're coming down into this low here, we'd want to be seeing lower lows on the price action, higher lows on the momentum waves, and that could give us a signal to take along from this box. Okay, that's about it for Bitcoin as far as price action goes. We checked out the CVD. We can check out the liquidations real quick here and see if anything has changed on the liquidations. Now, we've been looking at the local liquidity. Let's zoom out onto that weekly chart. Okay, so we still do have a pretty big cluster of liquidity above us into that 85K level up above us. So a lot of people that shorted the SFP from yesterday and the semi-equal high, they have put their stops obviously above these highs, and that's why we have a liquidity cluster here. So there is a possibility that we could move up to grab this liquidity because you can see below us, there's not much below us. And then we do have that major liquidity at 88K, which is where our bigger golden pocket starts. And I talked about this in yesterday's video. This golden pocket here from 88K to 88.6, we have the anchored VWAP, the midline. Actually, I don't think that anchored VWAP. Let me make sure here. Yeah, see, you know what? Coin Trading View does that. It on low time frames, it will shift the anchored VWAP down for some reason, but that's not the real spot for it. So, but we do have a major golden pocket into a pitchfork midline here. And then if we look at our bearish pitchfork, we do have that naked daily point of control. Now that naked daily is on Coinbase as well. Golden pocket and then the upper pitchfork band. But yeah, look at, okay, so speaking of this bearish pitchfork, we rejected from the midline. My thumbnail yesterday was, will we reject from here? Because I saw signs that we might roll over and reject from this area instead of reclaiming it. And it looks like we have started that process today. Now, let's look at our local support level, that 786 that I just described to you guys. We can put our 786 on the chart and look at where it's coming in at the pitchfork band of support. Now, it's kind of right in the middle, or if it takes some time, it might be. But our daily's also there. So let's zoom out onto the daily chart. And let's mark out that daily just real quick here. Daily level right there. And we can go back in onto our hourly chart. And you can see that our box of support that we laid out is within the pitchfork band. So we had laid out this box of support, the SFP from these highs, these internal highs, down to our 786. Local SFP liquidity grab right here. And you can see that we also have pitchfork band of support down there. Now, overall, if we go out to the 4-hour chart, let me just, I'm going to get rid of this now just to clean this up. I'll leave that daily there. But let's go on to the 4-hour chart, and you can see how our pitchfork band overall was holding us. Yes, we saw some wicks past it, but overall our pitchfork band was holding us. So if we come down into our 786 and our daily area, the pitchfork band might hold again. But this, to me, is not a good sign. Rejection from the midline after losing it. You know, it was holding a support up in here. Support, support, lost it, back test, back test. Are we going to come all the way down to the bottom? That's the question. So right now we don't have enough information. We still have to work our way to our local support to see if our local support holds. If it doesn't, we could look for the SFP of the lows. And then if we don't get that, we're probably coming down to, like, at this point, with how steep this is coming, 74K. But I still think overall, guys, I still think we have a very strong possibility of coming down to 72 to 70K. Now, I've been talking about this for months. If you go back to my videos in November, let me go on to this chart for a second. And if you go back to November on the daily time frame, in this area here in November, I was talking about the bearish divs we were seeing on the daily time frame confirmed. We were topping out on our total chart and our total 3 chart. I was telling people to take profits on alts and Bitcoin in this area because we could see a range form at the top. And we also have to remember, this is at the top of a weekly cycle channel that is, and the 5th wave of an Elliott impulse. That is a very important area where we could form a distribution range. I was talking about that all the way in November before the range even formed. Now we have formed that range, and now we are breaking down from that range. So we have to keep into context the higher time frame bear divs we are seeing here. I still do think a drop down to 72K is the most likely scenario. And the reason why I say that is, I mean, like, look at our weekly divs still have quite a ways to fully play out. Our daily, yes, we have daily bull divs now, but let's look at money flow here. Money flow does look like it's wanting to curve out again, continue to curve out. And I'll go back to saying this. I've been saying it the whole time. This range that was forming up here, the entire range from November 11th to when we broke it down a couple weeks ago, our money flow was draining. We had bear divs on the chart, all through here. Money flow was draining the entire time. And I kept warning about that in all my more macro time frame looks. I kept warning about this money flow. In my video about distribution a couple weeks ago, I said I'm leaning towards distribution based off the bear divs and based off money flow that we are seeing. Well, since then, we have made new lows 2 separate times. And I did say in that video, we will see small bounces along the way, but it is most likely that we work our way down to our major support level on higher time frames. Where is our major support level coming in? It is coming in around 72 to 70K. And the reason for that is if you take your fib here, you go from the 49K lows up to your all-time high. This is our wave 5 of our Elliott impulse, and we go turn on our golden pocket. Look at where the particularly 70K for me, 70,200 is where I'm really looking for a sniper entry, because you can see that it's the value area high of our prior 7-month range in confluence with our golden pocket. Now, if Bitcoin is not going into a bear market, we really want to see that bounce there. Now, even if we bounce there, we still have the potential of going into a bear market. All of this down to 70K could be an A wave. We could bounce up here, retest our point of control around 100K, 98K, and then make a C wave all the way down to, I'd say, at least 63K, where our point of control of this range is, if not our value area low of the range, around 60K, 59.8. So, keeping into context the higher time frame, I know you guys don't like it when I talk bearish, but I'm just trying to prepare you for what can happen based off technicals. Now, I know there's a couple other really, really good traders in the market today that we're talking about, an extended fifth wave and a super cycle where we're going to see, crazy, crazy price action up to, 400K and stuff like that. Sure, it could happen. It's absolutely a possibility, especially with the adoption that Bitcoin is getting now and with a crypto-friendly administration in the biggest country in the world. Biggest finance country in the world, I should say. That's a possibility, but I'm just going off technicals. A lot of people say, oh, we haven't seen the euphoria of a regular market top in this market. And I actually disagree, respectfully have to disagree with that person. We saw Trump launch a meme coin 2 days before he got sworn in as president. It did 14,000% in 48 hours. We saw coins like Fart Coin doing 1000Xs. We saw meme coin season, like the biggest meme coin season we've ever seen, where every single meme coin was doing a 50X or more. We just didn't see the traditional altcoin season like the blue chip alts run like they normally do. And that's because everyone was gambling on meme coins. But we did see signals of euphoria in the market. I mean, if you guys weren't paying attention, Michael Saylor's buying $2 billion at, 106K or whatever it was. Michael, I know he bought some at like 104, 100, we saw all the signals of a bear market, like what you see, topping signals. I know when I would go to the gym, every gym bro that knows that I'm in crypto come up to me and ask me, hey, should I buy Bitcoin today? Is it a good time to buy this? Is it a good time to buy that? I know every person that I interact with that knows that I'm involved in crypto asking me, people at the store, people at other works, and stuff like this. It's like, so we were seeing those topping signals. You see all over the mainstream media, Kathy Woods and others talking about Bitcoin going to 600K by the end of 2026 or, all these things. These are signals of topping signals, behavior of a top. And that's why I do think I'm not ready to call a bear market yet, but I do think that we could see a extended mini cycle, bear cycle, almost very similar to what we saw in 2021. If we zoom out onto the weekly chart, what did we see in 2021? We saw a huge drop to the downside from 65K. We dropped all the way to 30K. We chopped around for a couple months during the summer, by the way. We're going into summer. During the summer, we chopped around here for a bit, and then we saw one more ABC correction to the upside. ABC correction to the upside, grab the liquidity of the high, and then dump and start the real bear market. So what could we see right now? We could see a repetition of this. But let's actually look at this real quick. Let's do our bars pattern, and we'll just take it. Let's see. Let's do this here. And then we can go over here. Let me get rid of this. Let me get rid of this. I'm just going to hide this. And we'll look at what we could see here. We could grab this bars pattern, and we might see something very similar to this over the summer, over until maybe this would put us in September, at the end of September, middle of September. So I do think it's possible that we could see something like this. I'm not saying it's going to happen yet. I'm not ready to call that. I want to see how we bounce from 70K, how 70K holds us, 72 to 70K holds us. But there is a possibility, even if we do bounce, it could be like the B wave of an ABC correction to the downside. You can see clearly on this bars pattern, this is an ABC pattern to the upside. We just might get as far as the mini bear market, all of this really on the weekly being a weekly A wave, seeing maybe a month to 2 months of a B wave where we push up to like 97K, where that point of control of this range was, and then see a C wave down to, maybe 59K, 60K. And then continue. After that, that would actually be somewhat healthy, and then we could start a brand new impulse. Like this 5-wave impulse is clearly matured. And so after we see an ABC correction, maybe we could see another 5-wave impulse, and we could see the super cycle. But that would mean that we have to have a decent multi-month correction in order to kind of reset the markets and get that push to the upside. So that's kind of what I'm looking at here as far as larger time frame stuff goes on Bitcoin. But overall, we're in a downtrend, and we just kind of need to follow what's happening on the charts. We trade level to level. We come in every single day. We look at our potential patterns, our potential setups, and we just do that. So, all right, let's go to Ethereum here. Ethereum is still just chopping around the same support level as yesterday. You can see that we're still chopping around at the bottom of this channel. We did reject from that range, not range, the midline of the channel. Midline of the channel rejected us here, rejected us here, rejected us here, rejected us here, and rejected us here. Now we actually are coming up to the midline just now in the last 4 or 5, 6 hours here. And it looks like we're seeing a rejection again from the midline. So this trend, this is the blue channel, that's a very much steeper channel, is really giving us some strong resistance locally here. Man, that's a steep trend. Eventually this is going to have to break, but that doesn't mean we can't chop all the way down to 16 to 1500 first. If we continue to roll over here, maybe SFP come back up, that's what we'd want to see. But right now it's not looking too hot on Ethereum, and we are at the bottom of our much bigger channel, the pink channel here. And this, let me hide this blue one for a second. This bigger pink descending channel is a much larger time frame, really all the way from the 4100K highs. And I use the low of the flash crash. You can see that it's been highly respected, midline, midline, midline all through here, rejected from the midline, and now we're at the bottom of it. So it's a bit confusing because we are getting pushed down by the other channels midline locally, but we're at the bottom of a major channel, and you can see we are consolidating here and overall holding it. I'm going to delete this box now. You guys know that we're at support. It's a higher time frame support, and I did say we could form a range for a week or 2 weeks in this box, but maybe I'll just hide it. There we go. So now you can see here at the bottom of the channel, we're really consolidating at the bottom of the channel, forming kind of this downside range here, downwards range, but it is holding overall on higher time frames. We're seeing wicks past the bottom of the channel, but the channel is holding. So I do think we could absolutely see a relief rally, especially if we can get above that midline that we keep rejecting from of the other channel. Let's turn that on. Let's see, is it that one? Not that one. This guy here. If we can get above this midline, I do think we could see at least a relief rally up to our golden pocket area. Now, to the downside, guys, I'm not interested in much besides, let me do this. I'm not interested in much besides that. Let me get rid of this. The SFP of the lows, if we actually see a valid SFP, you can look to long that. But this big box down here, there's nothing much really until we get to $1,600 to $1,500. So if we start to lose this channel here, yeah, I mean, it's just going to be really bearish for this coin. I mean, we could look for the bottom of the blue channel because it's such a steep trend that you can see when we hit into the bottom of the channel, you get some pretty nice moves up. Hit into the bottom of the channel here, got a pretty nice move up to the midline. So if we come to the bottom of the channel, but it's not quite to our $1,600, $1,500 support, we might see a bounce up. What I'm worried about is if we do really start to roll over here, coming down to the bottom of the channel, well, then if we bounce from the bottom of the channel, look at what we're going to face. We're going to come up to the bearish backtest of our bigger pink channel that we'd be losing to the downside in confluence with that same midline of the smaller, steeper channel that keeps rejecting us. And it would also be probably the point of control of this little range in here, or the value area low, even worse, of this little range in here. So you'd be losing your range, bounce here, but you'd be having 3 bearish backtests. You'd have the bearish backtest of the value area low of your local range. You'd have the bearish backtest of the big descending channel. And you'd have the, I wouldn't say bearish backtest, but the backtest of your midline here of the smaller channel. It's just not Ethereum until we can break above this midline and start to flip it. It's not looking too hot for Ethereum. It looks like it wants to roll over. Right now, we are squeezing. Let's zoom into the hourly chart and let's look at this. We are really, really squeezing right now in between the bottom of the channel and the midline, the bottom of the channel and the midline. So we're probably going to see a move out of this pretty good. Which way do we go? We can look at our divs and our money flow to see which way we think it's going to go. Right now, if Bitcoin keeps dumping, I do think it's going to go down. But let's actually check out our divs. Let's go on to the 4-hour chart. Okay, so money flow is bottoming out. We're not seeing bull divs, though, because we need to make lower lows in order to see bull divs. We're not making lower lows. But that would mean if we do dump down out of this, it would give us a nice potential setup. If this didn't blow out completely, if we just got a little bit lower like that, that would be nice. Let's go on to our 15-minute chart. Man, let's see. Get rid of this. Yeah, I mean, not much here. I don't like, these momentum waves are just getting lower and lower and lower. Now, it's not bear divs because we're not, well, because these are getting lower and lower and lower too. I guess it is forming kind of this downwards channel area here. Let's look at this. Let's go here to here. This is after this ABC correction. So I know this looks really confusing. Let me hide some of this stuff so you guys can actually see what we're looking at. I'm going to bring this guy up next to this guy. Okay, just this channel here. Did we hit that daily? I think not quite. We front ran it just barely. Okay, but yeah, you can see here on the 15-minute, we're kind of forming this descending channel here. You could even, after we saw our initial ABC, here, and then we've kind of just been forming this channel to the downside with a channel in our momentum waves as well. All right, that is it for Ethereum. I'm going to make another video later today going over the rest of that, so stay tuned for that. I'll see you guys later.